What is going on, everyone? Thank you all so much for tuning back into the channel. It really means a lot to me and my brother. And as you guys all can tell from the thumbnail, I took no trades today. And the reason for that is because we had a little family emergency kind of yesterday. And I just didn't feel like I was going to be in the right headspace to trade today. But I still wanted to show up and give you guys a video. And what I wanted to talk about today was other futures you can trade, not just the Nasdaq, because I know we've been solely focusing on it, but I believe it was Tuesday or Wednesday I did trade a ETF called UCO, and I was up only like $7 on it, but I never got to provide any in-depth info for that. And basically, to sum it up, is the Nasdaq, some days it is gonna be without a doubt choppy, right? Some days the Nasdaq is not gonna be the most exciting thing to trade. And today, right at market open at 6:30, it had a nice sell-off, but right after that, leading for the rest of the day to from around 6:50 right here in the morning, it was kind of choppy and trading somewhat sideways, right, between this type of channel. And the margins, in my opinion, aren't even the most attractive. Like this type of push here is like 1%. It wasn't as big of a move like this, and a lot of people might be wondering if there's any other ETFs you can trade that correspond to futures, because what if you show up one day and you find the Nasdaq not really moving or very clear and you're not liking to trade it? You don't only have to focus on that. There are plenty of other futures with ETFs just like the Nasdaq that have corresponding ETFs where one will go up and the other will go down that act in opposites, right? And I just want to go ahead and share that with you, that if the Nasdaq isn't there, you never have to force anything. There are other futures to trade, one being crude oil. So this is the crude oil future, and as you guys can see, this was right around 6:30 in the morning. Definitely had a much clearer pattern, and on top of that, it just had a bigger type of move, right? A bigger gap up. It wasn't trading sideways like NQ was. These are nice plays on the way up. And on top of that, this future just tends to be more volatile than the Nasdaq. So if those moves aren't, you feel worth it for you, you can definitely try checking out /CL. And the two ETFs that correspond with it are UCO, which is obviously going to be acting in exact, basically mirror how /CL did, right? They look pretty identical, pretty much. They trade exactly the same. So it is the ticker symbol UCO, and the inverse is going to be SCO, right? It's acting the exact inverse. So just like the Nasdaq, TQs, if you want to get into TQs if you think it's going to go up, or SQs when you think it's going to go down, /CL crude oil also has ETFs, and they are UCO and SCO. But if you'll take notice, these are much more volatile, right? This is around a 4% play from the bottom to top. That's really attractive, a lot more attractive for people. It can be than Nasdaq because it usually only trades around 1 to 2% or something like that. These definitely have more volatile plays, so if you want to try and trade that and look out for that, then you definitely can always switch to this if the Nasdaq you find just you're not liking it that day. And besides crude oil, another future that I have traded before that I want to let you guys be aware of is gold. This is the future for gold, and as you guys can see, right around 6:30 in the morning, it formed lower highs here and consistently was selling off the rest of the day with lower lows and lower highs, and just providing beautiful opportunities to be able to capitalize on, right? This is definitely a large move, and the two ETFs that correspond with this are JNUG. As you guys can see, JNUG was acting in exact, it was acting basically, it was mirroring gold, right? Gold started selling off really pretty aggressively throughout the day, and if you guys look at JNUG, it's going to be the same thing, right? Started selling off aggressively, and the inverse is going to be JDST. JDST is the inverse ETF for the gold future. And if you guys will notice, some futures, like the ones for gold, they might not act in exact correlation like the Nasdaq. The Nasdaq does a pretty good job with TQs and SQs following it. these still follow it, but they're not as close to it, but definitely still tradable. But I just want to make you guys aware of that. And yeah, I just want to show you guys forward slash GC and forward slash CL, crude oil and gold. They were definitely looking like a lot more clear patterns to trade for the day, right? The directions were a lot more clear, and on top of that, the margins were a lot more attractive than forward slash NQ, right? We can all agree with that. This ended up starting to be choppy and trading sideways with like 1% plays, and you can always switch to the others if you find that the NASDAQ isn't there for you. So just want to make you guys aware of that. And one last thing to end the video on, we gotta check out BBBY. It was a stock of the week kinda, and I just want to go ahead and share with you guys. It's trading at $11. That's where it closed. Right now it's at $9.60. This stock has just absolutely died, right? It had the large rallies we saw up, and when I made my last recap on BBBY, I said if you were shorting the stock after it pushed up so aggressively, it ended up hitting below the EMA right here towards the market close, and I was saying how if I was shorting the stock, it wouldn't be the dumbest idea to sell the shares, right? Because of this consistent uptrend with the EMA line. Anytime it's uptrended huge, it's tended to come back down, dip below the EMA a bit, and keep going. And right around here, it was no different. It pushed above this green SMA line, shot up huge, and once it started uptrending again, because it did have a long period where it was just fizzling out and dying, once it caught this momentum and uptrend again, came back down, ended up curling just below the EMA line, and not a shocker, just shot up huge like it has done before. And when it came back here, you could have loaded off your shares because it did have a gap up. It tried to still validate this type of pattern, right? So the next day it did shoot up around 15% afterwards. So it would have been smart to offload your shares right below the EMA line in case a move like that happened. And obviously you can always get back in. So it shot up 15%. A lot of people may have been scared that that move was going to go, but ultimately ended up forming a lower high and started to fall, trending below the EMA line, the blue EMA line here, and broke its pattern. It didn't want to keep up trending. Anytime it would come right back down, it wouldn't want to keep going with the higher highs and higher lows. So it formed a lower high, and since you were already out of the shares you sold, you don't care how high this is gonna spike, right? Because you're not worried. You did your part in locking the profits. It didn't have a huge spike, but it did have a 15% push, which I know in the grand scheme of things with how this trading, it's not gonna seem huge because it's up like 200%. But 15% is still enough for me to personally be uncomfortable. I don't know about you guys. Everyone tolerates risk differently, but I would have been uncomfortable with something like that. So I wouldn't have been in this. And on top of that, after I saw it formed a lower high and wanted to curl down below the blue EMA line, then like I said, you can always have gotten back in, and that would have done you very well because you could have bought back in, never broke above, and it just had a nice drop today. As you guys can see, it was down over 40% on the day. Definitely not pretty if you wanted to keep trading it. And these stocks that have these type of pump and dumps, you can say, just like there were other like meme stocks like GameStop and AMC obviously like a year or two ago that were going crazy. It's very naive to think these stocks are just going to keep going up and up and up forever just because there's a reason these stocks were fizzling out and dying, right? The company itself, Bed Bath & Beyond, was not performing the best. And these little surges, or big surges, they're not little, these big surges, the company's only surging because of the momentum and volatility. The actual company itself is not gonna just go up in value like this. It's definitely overvalued, right? Because of just the hype of everyone buying in. The company should not be worth this much, because as evident by this whole sell-off it's been having. The company was just struggling, and it only took some volatility to bring it all the way up, but everyone knows that this company is not going to keep going up and up because it was not doing the best, or it did not have any good earnings to shoot it up. No large positive news catalyst that took into effect to push it up. It was solely off of just a lot of people trying to hype it up and buy it. And obviously it did end up crashing just like most of those other stocks did. So I just want to make you guys aware of that. And yeah, I hope you found this video entertaining. I enjoyed definitely reviewing this right now. And yeah, that's it for today. Thank you guys all so much for tuning into the video. Me and my brother are very blessed for every single one of you watching. We really appreciate any of you that just keep coming back and learning anything. And yeah, that's just it. Thank you guys all so much. I hope you have an amazing weekend and take it easy. We'll see you all next week.